All right, guys, welcome back to We Talk Money. We're going to jump right into it. The Fed announcement just came out. They raised 25 basis points. So I guess really no surprise there, right, guys?
Not really. That's definitely what the market had been pricing in as we got closer to the meeting, and most of us kind of expected that. I think if they went no hike, I think the market they would have really spooked everybody because we would have been thinking, what do they know that we don't know yet? Like this must be really bad for them to go from being super hawkish, wanting to fight inflation, and wanting to stick to their guns to not hiking. So that definitely was not what we thought was going to happen, at least for myself.
Yeah. And did you notice anything on the plot chart?
Yeah, the dot plot, I compared it to December's dot plot just to kind of see how different it looks. And it really doesn't look that different. 2023 still looks about the same. 2024 also looks the same. We're going to maybe see some rate cuts in 2024 according to the dot plot. And then 2025, there were really no surprises there either. So I would say, as far as the dot plot goes, no big surprises, no massive changes. Um, yeah, looks pretty close to what it did in December.
Cool. Let's see how markets are reacting. So, had a little bit of volatility, but actually nothing too crazy right after the announcement. Like you said, I mean, if there was a surprise on either no cut or 50 basis points, I think that would have maybe caused more volatility. But Bitcoin and stocks have been showing some surprising strength. And you can see here on the hourly for you guys watching the video, just a little bit of volatility. And I think there was some buying in anticipation over the past couple of days, but ever since the big breakouts the prior week, it's been kind of lower volatility. And then taking a look here, the NASDAQ is finally actually high ticking the pivot high from early February. So it's actually leading the charge quite a bit compared to large cap, and small cap is really, really lagging behind. So tech and Bitcoin kind of leading the charge. Bitcoin gold also taking a little bit of a pause this week. The dollar actually selling off quite a bit. Commodities kind of flat to up. Interest rates still volatile. So yeah, just kind of a mixed bag here. Trav, what do you make of this?
Yeah, I've been surprised by the strength in stocks this week for sure, given we're still seeing wobbles in the banking market, within banks, regional banks in particular. You've seen significant volatility in stocks like First Republic Bank, FRC, that continues. Of course, all of the other stuff from last week when we had the failures. And there's still a lot of uncertainty over whether or not we're going to see further crises in the banking system. So it's surprising to see stocks rallying. But of course, one of the reasons for that is they benefit as long duration assets from lower interest rates. And we have seen yields pull back quite a bit. Now they're reversing a little bit today, but overall, I mean, you've got, and actually now, no, it looks like the yields are continuing to come down today, post Fed announcement, but earlier today they were up. So we've seen a lot of volatility in rates, but generally the trend on the short side of the curve has been for rates to come in. So you had the 2-year yield over 5% just a few weeks ago, and now we're looking at around 4% or just north of 4% on the 2-year, and even lower on the 5-year and the 10-year. So that helps those long duration assets, because last year, as you remember, NASDAQ stocks, tech stocks were getting whacked. One of the reasons was rising interest rates. But now with rates pulling back, a lot of investors are saying, well, maybe it's safe again to go buy long duration tech stocks and assets like that. What worries me about that is that, of course, the reason for those rates pulling in is not a good reason at all, to have stress in the banking system, to have concerns about what that stress in the banking system could lead to from an economic perspective down the line. I don't think is going to be good for stocks, including big tech stocks. But nonetheless, that's where we are today. And hey, if we want to rally Nvidia to 1 million, I guess that's what the stocks are going to do. That stock literally goes up every day. I don't know what to say about Nvidia at this point.
It's AI, Trav. It's AI. No,
Yeah.
it actually does look like the market did respond positively and rallied a bit into the Fed announcement. So the market liked it. The market likes everything right now.
Well, I guess the market believes Yellen, right? And like this is kind of the confidence game that we're playing right now with these banks. Is will they backstop everybody's deposits? Will they be able to stop that from even getting that far and stopping a run on the banks? I've spent probably more time than I should over the past couple of days looking into Balaji's $1 million Bitcoin bet, and we can talk about that, the idea of hyperinflation, and if anything, just the marketing ploy behind the bet. But yeah, what do you guys think as of like today, the situation with banks? Has the worst happened already, or is this just the beginning?
I'm inclined to believe, given the experiences we saw in 2008 and 2009, and then again during the European crisis in the early 2010s, I'm inclined to believe that we haven't seen the end of it. You typically will see, after failures, you're going to see fear persist for a while. And we have not cleaned up every issue. The government has not come in and backstopped every bank deposit. The government's still raising interest rates. The Fed just raised another 25 basis points. And while that was in line with the new expectations, they're still raising. And so you can still have a flow out from bank deposits, which are not really keeping up with interest rates. You can have deposits still flowing out because of rate reasons, going into money market funds and treasuries. And you can have deposits still flowing out of banks where there's fear that maybe the asset side is at risk. You also have a significant amount of banks that are exposed to commercial real estate and other types of loans that people are worried about as rates continue to rise and as the economy weakens. And so have we seen the end? I would be very, very shocked if we've all of a sudden just sort of magically like gone from worrying about the whole banking system to 1 week later being like, yeah, I guess it's good. Like the Feds will probably implicitly back deposits, but they actually haven't come out with a new program to do that yet, right? I mean, it's really questionable. I don't think we're out of the woods yet, and I would be surprised if this is all over.
Yeah, well, I think Balaji would agree with you, but maybe even a little more extreme. So for anybody that doesn't know, Balaji, who is a guy he was the CTO of Coinbase and just a prominent figure in crypto. He did an interview the other day with Pomp, and I watched the hour-long thing probably 3 times just to really try to digest his argument for what he thinks is going to happen. And I posted some notes on my Twitter. I retweeted the interview and then went through and basically tried to get my brain to fully understand what he's talking about, because when it comes to the macro side, I'm definitely not the most qualified person to talk about it, but I'm trying to understand what I can and trying to map this like a trade, right? Like there's a few possible outcomes and the consequences are massive. And based on what he's saying of, $1 million price in Bitcoin over the next 90 days, what the odds of that I think are very, very, very tiny. Of course, anything can happen, but I don't know. I wanted to get you guys' opinion on this, but I think the odds of hyperinflation over the next 90 days are small, but there's, we live in a world where there's a high probability that a low probability event is going to happen. And I just want to be prepared for any possible outcome, right? Like that's how we think about trading and investing is we look at all the possibilities, we try to weigh the probabilities, and then we create plans to manage risk and hammer opportunity where we think we see it. So yeah, what do you guys have any thoughts about that?
Well, first, can I make a quote from the recent FOMC statement?
Please.
Recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring, and inflation. So I guess I am more in the deflationary camp. A recession is naturally going to weigh on the economy, and in turn, people will not spend money. Prices may go lower, wages may go lower. I don't know. I'm having a hard time wrapping my head around, and I haven't spent enough time listening to his theory there and what exactly it is that he thinks is going to lead to the hyperinflation. But the deflationists are out. They are talking about the complete opposite. So I'm not seeing it. Trav, maybe you have some insight on that.
Yeah, I mean, I think it's an interesting idea and an interesting bet. Like Chris said, the asymmetry of it, I think, is what makes it interesting because you don't need to be 100% confident in it. If you have a asymmetric bet where the upside is so huge, even a low probability of that outcome would potentially justify a bet like that. But where do I sit in this camp? Deflation versus inflation, Bitcoin, hyper Bitcoinization, hyperinflation. It's unlikely, I think, for it to happen that quickly. Yes, I think if we saw a full-on crisis in the regional banking system and the Fed's having to step in and backstop all deposits, and then if there was some big money printing that happened because of that, I think you could see a runaway hyper Bitcoinization. You've already seen Bitcoin and gold respond to the recent crises, so I think we are seeing some of that in motion. But here's a few things to think about that I think make this bet more unlikely. You've got a very divided Congress right now. Republicans are already trying to crack down on a lot of the fiscal spending that the Democrats have put in place over the past couple of years. You've got a debt ceiling fight coming over the existing budget, and that will come to the forefront, I think, after we see the tax receipts come in a lot lower than expected in April. Once tax season is over, we're going to see that all those capital gains that help tax receipts in 2021 and maybe even 2022 are going to be gone this year. Well, I guess that this would be 2022 tax year, but you'll see that impact on tax receipts. So I think you're going to have this debt ceiling fight sooner rather than later. So it's really interesting to think about, like, how are you going to get some massive fiscal package and money printing when you're actually seeing the opposite? The Fed is still raising rates. The Congress side, on the fiscal side, is still trying to push back against further spending. So you'd have to have a very, very quick flip. So I think to get that quick flip, first, you would probably see deflation before you saw the inflation. You'd have to see a massive, massive deflationary event before you got the inflationary event. So I think you'd have to see that type of sequence before you saw the hyper Bitcoinization.
Well said.
Yeah. And I think, correct me if I'm wrong, but this is how I kind of understand this, is like, in the short term, the thing that can cause this massive capitulation and rush into Bitcoin is if all of these, whatever, 300 and something banks do become insolvent because there is a run on the banks and short-term rates don't come down quick enough. That really, I think, would be the catalyst in the short term, right? But if that doesn't happen, and if people believe Yellen and there isn't a run on the banks, then in the short term, it's not going to happen that quickly, right? Is that it, or am I missing something?
That's certainly my theory. Yeah, I agree. I think the catalyst would have to be, again, something very deflationary, like just a very quick and scary massive run on the banks. And, obviously initially that would probably be deflationary for risk assets, and then deflationary for the economy, especially with, like you said, rates sitting up where they are and even higher than they are, this afternoon versus where they were a week ago. We're in a very interesting set of circumstances where I think you'd have to see, to get that fiscal response that Balaji is talking about, I think you have to have that crisis catalyst at a level that we maybe haven't seen since, say, Lehman 2008.
Well said. So moving on down the pipeline here of inflation versus falling prices, home prices actually fell for the first time in February, for the first time in 11 years. So finally, we're starting to see the data reflect that these higher interest rates are impacting the real estate market. And then if we take a look, though, so mortgage rates actually came down a little bit this week as well. And existing home sales had a really big pop. So this is still, for me, kind of a mixed bag where prices are coming down, sales are coming back up, rates are coming back down. So I think, in my mind, we still have a supply constraint and there's still a lot of demand, but people still can't afford it. So I don't know. It just seems like a really mixed bag here as well.
Yeah, and you did have that dip in rates, I think, to your point, like earlier in the year, you had a quick dip in rates before they went back up in like late February, early March. So I think the real estate market was responding to the dip in rates, and because seasonally we're moving into a stronger seasonal period. So I could understand why we might see an uptick in existing home sales for the month of February, particularly weighted towards that first half of February when rates look like they might actually be coming down a little bit. And then And then we saw rates tick up, and now they're back down again, of course. So yeah, a lot of it probably hinges on rates because, most people use significant amount of debt to finance those home purchases. So honestly, I think what we're going to see is going to be highly dependent on the rate path. And if rates stay elevated for a while, then I think further pressure on real estate prices is something we absolutely could see.
Yeah, and another interesting point to that is if mortgage rates do kind of tick back down or stay where they're at now, a lot of people are buying down their rate to get into a home. So that could, if the rates get low enough, like to where they did, you have to pull the chart back up, but very recently when they dipped, or if they kind of stay where they are now, those rate buy downs could be what helps the real estate market just kind of continue to stay afloat. I know a lot of people were doing that, buying down their rate.
Yeah, that's typically a pretty popular strategy when rates tick up a little bit, which we haven't really had in the past like 10 to 20 years. But yeah, you could always have the future idea of like refinancing too. So people, if they find the right house for them, and even if they're overstretching a little bit, maybe they'll just bite the bullet and either buy down the rate immediately or bank on the fact that they can refinance into the future. But I think, Nick, you were saying this on Twitter or to us, I can't remember. Everything's a blur this week, but you were saying it's like, yeah, we need this anyway. Like prices need to come down, and it would actually be kind of good to have a little bit of a boring housing market for a while.
Yeah, I've mentioned it a few times that affordability is still a major issue in the housing market. I mean, with rates up and housing prices, sure, they are coming down, but are they coming down enough in certain markets is the big question. And a lot of markets are still hot. Like Florida is still burning hot in the real estate market. So a lot of people that I know currently in Florida trying to buy a home, they're just struggling. So I think that rates definitely or housing prices, I'm sorry, are going to have to come back down even more than what we've seen for people to really be able to afford it.
Yeah. Let's talk a little bit about charts. I was just checking in here. We've got a little bit of a pullback in price right now. One thing that I found interesting is how Bitcoin's actually been leading the charge over the past couple of months. We've had a much higher high in price. Just taking a look from the pivot high in early February, Bitcoin was about 20-ish% higher than the pivot high in February, where the NASDAQ is really just kind of flat. And then, Nikki, one thing you posted on Twitter was year-to-date performance of the major asset classes, looking at oil and gold and the S&P 500 versus Bitcoin, where Bitcoin's up 69%. Nice. And then
I mean, it's incredible, really. I know it's only a year to date, but
yeah,
but still, in comparison, it's just the
yeah, everything
volatility.
else is like up 3 to 6%, and then Bitcoin's just like this shining example. And granted, it's a lot more volatile, right?
Right,
So
right. That's what I said. Yeah, exactly. And I know that. I know that but even with that said, it's still it's exceptional to see it, when you compare it like this. It's just exceptional. So,
mhm.
will it stick? I don't know. Someone commented on that tweet. They deleted their comment, but they commented about, oh, how Bitcoin is for people wanting to commit fraud and money laundering, and for the dreamers and the hope, people on hopium or something like that. And it got me thinking. I was like, at what point are people going to? At what point are the non-believers or people that don't want to have any Bitcoin because they think it's because of that? Are they going to start to say, okay, this is a viable asset class now?
Well,
What's it gonna take?
there's always gonna be people that just, no matter how much evidence is put in front of their face, will never admit it. But yeah, I mean, I think that argument's just been beat to death, and it's been disproven because Bitcoin is a public ledger. And I don't know about you guys, but personally, I love buying my drugs and doing my fraud in physical cash. It's just so much more fun.
Yeah, that's the funny part. Isn't Bitcoin more traceable technically than cash?
Yeah, look, they're digital criminals like Bitcoin, physical criminals like cash, I think.
Whatever.
Yeah.
No matter what it is, criminals can use it, right? No matter what kind of, whether it's fiat or digital, whatever. But the point is as much as Bitcoin tries to die, it doesn't die.
Well, as much as people try to kill Bitcoin and say it's dead, Bitcoin doesn't give a damn. It's the honey badger. It just keeps going.
It's the ultimate honey badger.
And then here's the next step. This is what I think is super interesting is right now, there's actually going to be bifurcation in states. So there's going to be states that are banning CBDCs or are proposing to ban CBDCs, like Florida, and then Texas just came out with a bill proposal. And then there's going to be other states that run to Daddy Fed and, want to embrace that. So I think, I've been in my mind thinking so much at like a nation state level of like, okay, which countries are going to be smart and which ones are going to be stupid and adopt CBDCs. But it can actually break down in the US even further than that. And so, Balaji was saying like, hey, what do you do now if you believe that the banking system is fragile? You buy some Bitcoin and you move yourself to a crypto-friendly area. If you're in the States, you go somewhere like Florida or Texas. If not, you go somewhere like, Singapore or another country that's not embracing this bullshit fake central bank digital currency wave.
My question on this Balaji thing with Bitcoin to $1 million is like, do you guys think that he's pumping it? Or do you think he really truly believes this?
Yes, I think he thinks there's a chance it could happen, but he even said, look, he's calling it bit signal, right? It's like, it's an alarm. He's willing to burn the money or lose the money just to get enough eyeballs on it. And he probably owns enough Bitcoin that if Bitcoin goes up just a few points, it's going to for more than make up for that $1 million loss, right? So I think for him, $1 million is a drop in the bucket anyway. But if he even moves the market a little bit, it's going to be a net positive for him.
Well, now I'm questioning how much of this run in Bitcoin is because of fear of the financial system versus this Bitcoin to $1 million thing.
No, I think
is it like, what is really driving this? Because at first it was the distrust in the financial system that started the run in Bitcoin, correct?
I need to pull up the chart. I don't have it up. The 300 billion that just got put back into the system, is like they were tightening. And then overnight, boom, 300 billion, right? So stocks and Bitcoin both went up with that, but it's a combination of that. It's a combination of fear in the banking sector. I don't know how much his stuff really moved the market.
Making an impact.
Yeah. Trav, what are you thinking?
Well, I was thinking about how that rush into Bitcoin would happen, because I'm wondering if there's a constraint in terms of the fiat on ramps. Are there enough places and accounts opened on centralized exchanges or even through DeFi where people could move money into Bitcoin quickly enough for that to even happen? That makes me a little bit skeptical. Now again, price can move almost independent of volume. So people do forget that sometimes. So, price could move up much faster than total volume could flow into Bitcoin. That is a possibility as well. So I guess you could see Bitcoin go to $1 million if even just a few participants were willing to bid it to that level. But my understanding is, there's enough liquidity in Bitcoin where that would be difficult without a significant, tens of billions of capital. So yeah, I think, there's some interesting things to think about as far as mechanically, how would that work? But I don't know. I think even though that million figure was a little bit ridiculous, like, could we see 50K? Could we see a new high in Bitcoin in a scenario like we talked about where you had a massive banking system-wide crisis? Yeah, I don't see why it couldn't. And certainly the price action right now is suggesting like, yeah, that is definitely a non-zero probability.
Yeah, taking a look at the 24-hour volume, let's just assume, $10 billion a day in tradable volume. Let's think through some examples here. Like, what happens if the government comes out and says, okay, we're shutting off on ramps, or they put the pressure in more banks that, the Coinbases of the world are working with aren't able to have easy access to USD liquidity? What does that look like, right? Well, let's say there's a finite supply of Bitcoin on these exchanges, which there is, And let's say that, the people in that 24 to 72 hour period do bid those prices up to crazy amounts. What happens when you can't get money on or off of there and it becomes essentially like a paper thin order book, right? Like, yeah, it could crash by 90% in a day, or it could go up 10,000% in a day. Well, I don't know. I'm thinking through that. And yeah, if the government was like, no, you can't have this thing and we're cutting this thing off, the smart people are going to be like, okay, they're saying that for a reason. I want that thing. So I think price would go up.
Yeah. I mean, I see that. I definitely understand the possibility is there. And I think, I think through the mechanics, I think you're right. What you would tend to see as the order book thinning, potentially and price gapping in a way that, it isn't normal.
Yeah.
And in that scenario, I mean, who knows? It's like we see that in short squeezes in stocks. We saw it in early 2021 with GME and BBBY at times. And of course, all the crazy short squeezes we've seen, low float SPACs. We've seen a number of those squeezes where, if you get a thin enough book, bid ask starts to widen out and price moves can be insane. So
speaking of GME,
well, hang on before we I'll pull up that chart, but we actually have a little bit of that right now in the Bitcoin CME futures, where just in the past couple of weeks, we have had two large gap ups where over the weekend, the spot markets obviously traded higher. And then that created these gaps. Now, this isn't like runaway gaps, and price could certainly pull back to fill these. But I think what you're talking about is like just gap and rip, and like there is no pullback. It's just like gap, gap, gap. And then you even could see gaps in the spot market, which we typically don't see because they trade 24 hours a day. But if the order book thins out and then all of a sudden it's like, holy shit, there's no sellers for the next $1,000. And then it goes from 30 to 35K. And then, oh my God, trade. And then next thing you know, you're at 100. Like that's what a melt up could look like, right?
Yep, absolutely. Exactly right. Yeah, I think if you start seeing gaps of 1K, 2K, 5K, at that point, that 1 million target may not be crazy to think about.
Mm-hmm. I just don't know if I'd want to live in a world where Bitcoin went to 1 million overnight, because that would mean that the system is so destabilized that like, what would $1 million even get you? And like the risk of being a crypto holder, like I'd definitely go hide in a cave with my guns.
Inflation may go higher if Bitcoin goes to 1 million.
Of course.
Rolling in the dough, rolling in the wealth.
Yeah. We'd be walking around with wheelbarrows of cash.
Right. Yes. Yeah. How would you think about that in terms of your own Bitcoin holdings? Like, let's say you got a weekend move that was just unprecedented. Would you look to offload a certain percentage for fiat at that point? Or do you think that because the system would be so destabilized at that point, you're holding? I mean, for me, I think I would have to offload some, but I'm curious how you're thinking about that.
I guess the question is could you offload some, right? Like, is the market even viable? Do we have the on ramps, or are they cut off? If they are on and I have the chance to like sell one Bitcoin for $1 million, yeah, I'm going to sell a couple Bitcoin just in case it happens to be one of these pop and flop events. But I'm going to hold the majority of my Bitcoin because something there is fucked up, right? Mm-hmm. And whatever's happening, I don't know if I want those dollars, but it'd be cool just to collect a couple million and be like, all right, maybe this paper's worth nothing, but if it comes right back down, at least I got something out of it. Kind of a middle path.
Yeah, I like that. I think that makes sense.
Yeah. Okay. Nick, GME, what are we looking at?
Oh, well, Trev, I don't know if you saw this, but
of course,
GME had earnings and their stock was up 55%, give or take, in the after hours yesterday.
I did see Reddit was losing their minds.
And everyone's losing their minds because they think that, like, this is just going to keep ripping, and a recovery is coming for GME. They were slightly net income, slightly profitable, basically. Mm-hmm. And okay, look, a lot of people piled into GME from, what was it at the time? It was like $400 a share. I think they ended up doing a split or something, but over $400. Probably some people got into this and have a very, very, very high cost basis when they aped into it on that big run up. As far as where we're at today, in comparison to that, you know, we still have a long way to go for a lot of people to get their money back. I don't know how excited I am about the GME turnaround. They're moving into collectibles, so I mean, maybe there is something there. I just don't know what kind of like market multiple this thing is going to end up getting in the end if they can pull this turnaround off. But I'm not feeling super excited about it. I think it could squeeze a little bit further, and it could be like a trader. But people that are really looking at this as like an investment, and it's going to go back to where they bought it, $300, $400 a share at the time when they bought it. Just be careful. Don't get too stuck in that hype again, because that's what I'm kind of seeing starting to happen again, the cheerleading and all of that. So just be aware of that. Trav, I'm curious your thoughts fundamentally, because what they're arguing is that the fundamentals are there now.
Yeah, you know, I think on the cost side, GME is doing the right thing. They've cut enough costs now to get back to that, you know, just above break even level. And so, you know, the crowd now, the short squeeze crowd is saying, well, they're profitable, so they control their own destiny. They can't go bankrupt. But one thing to take note of is if you look at the revenue side, revenues are still shrinking, although not at a rapid pace, at least not at a rapid pace as they were losing revenue. So the revenue side is still in slight decline, which is not great, you know, if you're on a long-term time frame. But you know, I think they definitely deserve kudos for improving the profitability to a point where they're at least modestly profitable again. Now, will that last? That's a big question. You know, if they see revenues decline 20 to 25% over the next several years, it's going to be hard for them to keep cutting their way to staying profitable. You know, at a certain point, you cut enough fat, you cut enough meat off the bone, and you know, you're not going to get there. Like, you can't cut your way to being a great business forever. So I think they've really got to prove that they do have a sustainable way to stabilize and eventually grow revenue. I don't think they've proven that side of it yet, but you know, it is worth noting, like on the cost side, they've done a lot of good work to get themselves back to a point where, you know, they at least are not massively burning cash. So I think there's definitely some stuff to like there, but you know, it's still TBD as far as whether this turnaround is actually going to work from a growth perspective. Mm-hmm. At least it doesn't look like BBBY, you know, where, you know, the short squeeze crowd was trying to squeeze something that fundamentally was just falling off a cliff, like 30-40% sales decline. So GME is not that. So I think maybe if you have enough people shift into this trade again, you could see some pretty nice pops. I'm surprised though today that we didn't see it go up more. That would be a little bit of a concern if you're looking for, you know, this mega squeeze that we got a couple of years ago. Today it opened up and it's basically not really gone much higher than where it opened.
Yeah, it's basically a gap and crap below the 200 period moving average. So
that's what I was thinking. I think that it could end up making a good trader, or at least be paying attention to it from a trading perspective.
Yeah.
For sure. Now, one thing that I do find interesting with the collectibles thing, I have a buddy that's in the reselling industry, and vintage is killing it. Mm-hmm. And, you know, if GME could somehow get involved with that, or buy a company like, I think it's called Whatnot. It's like where a lot of people are getting on there and selling vintage clothes and stuff. So I don't know, maybe they could really tip into that market, and they may have something there, because I know the vintage stuff and the nostalgia, you know, that's really hot right now.
Yeah, I mean, collectibles are like 15 to 20% of their annual revenues, so it's already, you know, somewhat meaningful for GameStop. They've got, I think, a couple $100 million of annualized revenue from collectibles. So, you know, that's definitely an area, a bright spot where they can continue to thrive.
Well, talking about collectibles that I'm not interested in holding is being a bag holder with a lot of alts right now. Altcoins have just been getting demolished compared to Bitcoin. Looking at the alt BTC charts, you can see even today, a lot of alts are bleeding out compared to Bitcoin. And if we just look at the Bitcoin dominance just over the past month or so, a big breakout. So for you guys that are watching the video, you can see this chart, which if we break above 50%, back above 50% on the Bitcoin dominance, I think alt season is dead for a while. if we get a rejection off of this resistance area and we start to see capital flow from Bitcoin back into alts, I think we could go back into an alt season. I think that's lower probability though, with the regulatory situation that we're in. I think a lot of alts just need to die a bloody death. And my guess is that Bitcoin is going to really break out above that 50% level. But we'll have to keep an eye on this over I think the next month is going to be really telling if we're going to get an alt season or not.
Yeah.
All right, guys. I know we haven't been going for too long. This show mostly was going to be looking at the Fed rate announcement, which just came out. And I know we've all been really tied up with other things this week, but just wanted to get a show out for that. What else you guys looking at? Any other comments, questions that we've gotten? Anything you want to talk about before we wrap it up?
Oh, go ahead, Trav. You go first.
Oh, no, I was just going to mention too that we've still got the Fed press conference, which is ongoing right now, to kind of parse through those statements. And I've been following some tweets regarding that, but nothing too unexpected so far. Market seems to like the more dovish language. And I think the Fed also mentioned apparently that deposit flows have somewhat stabilized in the past week within the banking system. So those with inside knowledge apparently think that, we could have seen some stabilization here this week. So we'll see if that remains true. I remain a little bit skeptical there, but it's probably overall a good thing from a society stability perspective if we do see that.
Definitely. Nick?
Yeah, I'm just trying to parse out, like, from this price action in the S&P 500 and the NASDAQ, what the market is thinking and where we're going from here, because this strength in the indices has been kind of exceptional if you think about all of the headlines that we've had thrown at us. I don't know if the market is just looking very, very forward, or if the market is completely like clueless and blind, and we're going to end up selling off, and the market just doesn't know how to price this right now. So that's what I'm going to be paying attention to, is the price action in the indices. We're very strong. We're above the 200-day moving average in both the S&P and the NASDAQ now. The NASDAQ is looking quite bullish, in my opinion, amongst all of this bad news we're getting and potential destabilization in the financial system. So I think that right now, all eyes on price action. And I'm not counting out that continued idea of a choppyish market continuing. A lot of people are calling for a big sell-off. I just saw somebody call for it was in the news, a 50% correction in the S&P 500, or I think it was the S&P. And, people are starting to get very, very bearish again. And the most predicted recession is now being predicted again, right? Everyone's kind of on the side of recession. It's more selling from here. So just keeping an eye on that, and trying to make good decisions from here, not be too early, but also if the market does want to hold up, not miss out on opportunities as well. So it's a tricky market environment right now that we're in my opinion.
Yep. I'm long Bitcoin, flat alts, and yeah, that's about it. Just watching and waiting. Yeah.
Yeah, I've been sitting this week's rally out quite a bit in terms of exposures. I'm very heavy in cash and still, heavily short futures against my overall long position. So I'm pretty close to neutral, and I think it's fine. I don't feel FOMO because I think there's going to be plenty of opportunities, whether we are in choppy markets or we see a further leg down. I think there's going to be more opportunities to pick things up on sale. But yeah, it's interesting to know what the bond market is doing today as well. Just was checking in, and basically any yields beyond 1 year are suggesting rate cuts. You got the 2-year yield now down 24 basis points today to 3.93. That's well below where the Fed funds rate sits now. And the 1-year government bond sits right around where the Fed funds rate, the bottom of the Fed funds rate zone. So again, anything beyond 1 year, the bond market's basically suggesting rates are going to need to come down beyond that point. So interesting to note that. Yeah, very, very interesting, because we've had bond yields rise in previous Fed meetings typically. Now they're pulling back today pretty heavily. Yeah. Interesting.
Awesome. Well, yeah, we'll keep an eye on it over the next couple of weeks. I think we're going to have a pretty active spring here. So yeah, buckle up, folks.
We're buckled. Got the popcorn. We're ready to go.
Yeah. Awesome. All right. Well, thanks for joining me, guys. And we will see you next week.
All right.
Take
Thank
care.
you.
Cheers.